Hello, welcome. This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the previous week and how we can look for a better trade for the next week. Remember, this is analysis for the week that's starting from April 18th, Monday 2022. So let's get into the charts and see what happened last week. See, it's a bearish weekly candle that you see, wide range bearish, you can say. But in the Nifty, it's it's a small body, bearish candle. Both of them are still at the support zone. Previous resistance is now acting as support, and there is a change in polarity that is still possible, right? So that's weekly chart action. So overall, we lost 330 points on Nifty and 167 points, 0.5%. So Banknifty has not lost much. It was more or less flat, you can say. 161 points. 60 points is nothing, for Banknifty. And 20 weekly moving average, support is taken. That's what you can see that it has taken support in that zone. This is the daily moving averages that you're seeing there. But the weekly moving average support is taken, and then it is still above the Fibonacci 61 retracement levels. If you look, right. So retracement from the previous the swing high to the if you draw a downside retracement, it is still at the 61% above, right? So that's good, good sign. And it has a lot of support on the downside as well. Right? Well, Banknifty, which you've seen that it is not a full bearish candle. It's a small body bearish candles, but selling pressure can be seen in the VIX. It's almost like a spinning top or a inverted camera kind of very small body. And it also has supports down below. Both of them are breaking out of a channel, downsliding channel. It is broken out substantially above that, and then seems like falling back to the channel again, right? Before it may. Still, there is a long distance from the breakout zone, but that's what is happening. A breakout from a previous downside trendline channel is what we are seeing on both indices. It still continues to be there. A lot of support on both indices. Still above the 20 weekly moving average also. Right? On the daily time frames, you see it's a bearish candle again. This is the daily time frame. Right? Weekly is here, and daily is also bearish. We can see that. A clear retracement after a breakout. Right? Clear retracement since more than 1 week. Previous week, 2 days also. Last 2 days of the previous week also was bearish, and so daily candles are also wide range bearish. That's what you see, right? And changing polarity, we are seeing that since it is at the support zone, right? Previous it's at a support zone which was a previous resistance zone. There is a possibility that it can bounce up from here. Both indices still a possibility. Especially considering that we have the confluence of the moving average support down below. And Bollinger Bands, what do they say? Bollinger Bands are saying that it is, you can see the skews, the contraction of the volatility has happened on the Nifty, not on the Banknifty. So Banknifty still has a wide range. That means volatility can still be the Banknifty, and both are taken the support of the moving average, and it is not broken fully. So. And there is a bullish bias, but Banknifty is a more bullish bias because of the fact that it's still quite far from the moving average of the daily time frames, right? So a consolidation can be seen on the Nifty clearly because the squeeze is happening on the upside as well, right? But in the Banknifty, there is a bullish bias on the upside, so it's volatile bullish bias continues on the Banknifty, and some kind of consolidation and skews volatility contraction is what you see in the Nifty. Right. Now look at the support zones. We lost the 17,500, 7,600 Fibonacci support levels, and it has fallen to take a retracement support. 23 of the swing low. So we can see that there is a resistance. There is a gap support. Is there? The last 3 days it has slipped from there, and that's no longer valid. The gap that you see, the yellow mark. Now the resistance upside would be 17,500 and 7,600 as I said before. After that, you'll have to take 17,800, 18,750, and then 7950, 18,000. Above that 1800, 18200, 18350, 400, that level. So resistance in the upside. Downside supports after the 17500 is broken would be 17350 to 17400, and 17200, 300, then 17000 would be the major support, which is also a previous support zone, which could act as a very good support zone. Similarly, the Bank Nifty, you can see that it is a consolidation that's happening 1, 2, 3, 4, 5, 6 days of continuous consolidation, and the gap is still intact, right? So that is where the solid support is there. Resistance would begin from 37,700 to 37,800, and above that you have 38,000, and then 38,500 levels. Above that, 39,000 level is also critical support. 39,500 above, would break out of the previous swing high, and that would be really bullish. Downside supports would begin at 37,500 levels, and then below that we have 37,000 level as support, and then 36,800, which is Fibonacci 38, and then it falls to 36,000 nearby levels, right? And below that 35,000 would be Fibonacci retracement down. So our supports downside. Look at the momentum and the trend for the next week. You can see that Nifty is is in sideways momentum now, right? On the short term and the daily charts, and it is in the sideways on the medium term also. There is a small correction. It's not rising. It's sideways. It's pure sideways momentum is what it is. Momentum has slipped to the sideways. Banknifty also momentum is sideways on both the time frames. Now divergence are not seen. But ADX is a trend indicator and still showing the MI positive on the short term for both indices, Nifty as well as Banknifty. But and also the medium term also, right? So weekly and the daily is showing that the DMI positive zone is what the markets are. Because trend, absolutely nothing has happened for the trend, right? And momentum. Let's look at the momentum charts that we spoke about just way. The sideways, you can clearly say it's a sideways zone. In the Bank Nifty also, it's a sideways zone. Slips slightly from the moving. Right. Remember, there is a flag breakout that has happened, along with the channel trend line channel breakout, and now this momentum has slipped. So we right now have a sideways momentum. Now look at the trend charts that we talked about. The trend is short term, is bullish, still in the bullish zone. All the crossover has happened. Bank Nifty also is still in the bullish. So that's what momentum has turned sideways, but the trend in both the medium term and the short term remains still to be bullish, right? And looking at the volatility, it was kind of flat, 0.8% up, so 17.78 really see. So that below 20 is good thing, but we'll have to keep a close watch on whether it will spike back to the 28 plus above. So as long as it maintains below the 20 to 50 in that range, it should be fine for the derivatives traders. For the trading, basically, it would be a good thing. Now, open interest will be looking at the other side on next slides, right? For the weekly expiry beginning from April 21st weekly. The weekly expiry that's falling on 21st of April 2022. So although futures open interest, if you see, it's a short build up that is there in both indices. Short build up. So bearish is what the future option open interest build up is showing for the next week, next trading day basically, right? So the options open interest would be there in the next slide. Remember that we had a very short week of trading. Only 3 days of trading happened, and Thursday, Friday was a holiday. So the open interest data that you see may not be that much relevant, but because the trading has not, seriously happened on that strikes, right, that you see. So that data may not be very much relevant, but you can still see the levels. Put call ratio is showing 0.54. That's kind of very closer to bearishness and the bullishness on the Nifty, and 0.70 is not bullish enough, right? But still better put call ratio than the Nifty. So that's what indices open interest data is showing. So this is what we are seeing, right? This data may not be relevant because hardly any trading has happened for this weekly expiry, and this is for the 21st. But the levels are showing that 7,000 and 8,500 is quite far away, wide range. That's where the highest put and call rating is seen, and 16,500 and 18,000 is where the highest second level of put and call rating is happening. Put call ratio, we already seen that it's closer to bearishness, and short build up is what open interest, the futures build up is happening. 36,500 and 38,000 in such a wide range of 1,500 points is what you see in the highest put and highest call rating support and resistances that is seen on the Bank Nifty, and 37,000 and 40,000 is where the highest put and second highest put and call rating that is seen on the as per the options sector. Remember once again that this may not be relevant because hardly any trading might have actively happened, because of the truncated week of trading that happened last week, and this is for the expiry of April 21st. Let's look at this how the sectors perform. So all the sectors are down, basically almost all the sectors. The IT sector went 3% down, and so it's a bearish one. Can you imagine? A few weeks back it was clearly on the bullish on both time frame. Now you have bearishness that is seen on both indices. So stay away from IT. Metal, it was bullish, but now you're seeing that it's a bearish candle, and the momentum is slipped to sideways on the bullish zones, and the weekly still maintains the bullishness. So you can be cautiously betting on it still for long, but since the short-term momentum is not picked up, it's better to stay away, than to get stopped out. Right? You never know how the markets react to. Be cautious unless and until both the time frames are having bullishness. That is clearly within in the momentum perspective. Auto sector is showing that it's sideways 2% down move, and so metal also 2% down. IT all sectors are down. So it's sideways momentum, and then even on the weekly also it's sideways. Pharma is showing that it is lost nearly 1% down, and then sideways momentum. FMCG maintains the bullishness. Right, FMCG is doing somewhat good in the short term, even though it has lost 0.5% down last week. But in the medium term, it is still to catch up momentum. So, excuse me. So reality is also down 2.2% and slipped to the sideways. Even on the medium term, also it's in the sideways. So overall, there is no clear bullishness that is seen in any of the sectors except that FMCG short term, still hanging on with the bullishness. Right, so it's overall sideways. You can say all the sectors. Right. This is what we are talking about, right? This is IT that has turned formed a bearish weekly candle, and the momentum slipped down, and then it's very close to the all-time high. Here is metal, which is broken out now, but closing with the red candle, and then momentum on the weekly basis still maintaining the bullishness, but short-term momentum is lost. Auto, you are seeing that it is resisting at a resistance zone, not able to break out, bearish candle, momentum sideways on the weekly. Pharma is showing resistance at the place where it is trying to break out. Sideways momentum. Excuse me, my throat has some problems, so bear with me, please. FMCG is also sideways, and after a big breakout from the support zones, FMCG is slightly dipped, but still showing relatively better strength than all the indices. Reality is wasn't a channel breakout, but fallen back the channel with the medium term momentum sideways. Index heavyweights, if you see, it's HDFC Bank which is continued to show the bearishness after the circuit breaking up move that happened previous week. Right, it's showing bearishness and seems like it is falling back. HDFC also is showing bearish candle and still managing to hold the support zone, but HDFC Bank for some reason is slipping downside from where it broke out. So it may be big profit booking or panic or something, right? It's the HDFC Bank which had shown such bullishness last week, one single week mega move, is now in serious trouble. On the short term, that's what. Reliance was broken out, but last 2 weeks is bearish and seems like it's falling back to the channel once again. The major support zone again. And the momentum also has slipped to the sideways. So, bullishness on the Reliance has slightly taken a setback. You got to watch whether the momentum is climbing back to the medium term or not, and then take the calls. But relatively less of impact has happened on the Reliance. Look at Infosys, it's showing the same sectorial bearishness as here, also bearish candle sideways slipping, and TCS also bearish candle sideways continuation of momentum. ICICI Bank showing strength, it's broken out from the major resistance zone and showing a close green, but still momentum has to catch up. Right, slow, but it's heading good. It is showing strength. ICICI Bank, probably the only heavyweight that is showing strength to the last week. Kodak Mahindra is having bounce up, but selling pressure is resistance and a small body green candle is what you see. Previous 2 weeks is consolidation is what is happening, but unable to move up. That's what sideways momentum. So ICICI Bank is only heavyweight that has done well last week. Right? Look forward for the other sectors. They're all maintaining the sideways. Institutional participation, if you see, 11,900 here, 12,000 crores of selling in the cash has happened from the FIS side, and domestic institutions could hardly buy only 4,500 crores, and that's the downward that happened last week. Right? You can see that right? That it's they has continued to buy, but Fyers continue to sell. So that's your concern. London markets, US markets down, right? 1 to 3% if you take the major indices of Dow Jones, Nasdaq, S&P 500, all of them 1 to 3% down, right? So they're jittery, and you have to be cautious. The impact could fall in our markets as well. Dollar index, while shooting up with 0.65% further up, and it's above 100 and broken out of a major support zone. You can see that graph here, and it's heading to the next 103 kind of levels. So dollar is strengthening like anything, and look at USD INR on the upside. You can see that it is in the channel and is heading back. It is further weakened and it's gone above 76 plus levels. How long would the central bank be intervening to push it down to 75 kind of levels, right? It's unable to. So rupee is weakening basically, which is not good. Crude is again shot back to the 1.5 plus levels, 9.25% shot up back again after a small cool of that happened, right? Looks like it's heading back to the 10-year high once again. This is the crude chart. This is the global chart, right? Look at the green up move, 10% move, 9.5% of up move last week once again. Momentum is in the bullish zones. You have to be cautious. It is likely to hit the 10-year back once again. Gold is breaking out, right? Gold breaks out, you have to look at the market, what's happening there. So there's bearishness there, and gold is breaking out. It looks like it's trying to head to the all-time high of 2074 once again, where it missed to make the all-time high last time it attempted, and it looks like gold is bullish. Momentum of that is bullish. Price action is bullish, and gold is moving up. You have to be cautious that market could be moving down. This is what we talked about. The Dow Jones is showing bearishness. Nasdaq is showing bearishness. S&P 500 also bearish candle. Looks like it is falling back to support zone. So as long as this support that you see here on all these three major indices is kept, it should be fine. You can assume that it's consolidation. But if it breaches that, then we have trouble in our markets as well. So that's a summary of the global commodities and the global markets. Right? Gold is doing good. Right? So whenever market is down, gold will do good. Right? Crude oil is rising up and rupee is weakening. It's overall bearishness that we get from the global picture. Now, two actionables for the next week. One is Demat Fertilizer, which is breaking out of a rounding pattern and with strong momentum, big bullish candle, big momentum. And trend is also super. The only thing is there's a small divergence where the price is moving up and the momentum is moving still to catch up. So if the momentum is rising above the 8, and matching up from where it was previously high, it should be fine. Otherwise, there is small margin divergence, so to be cautious. But it's diluted, large number of bars, so you should not worry. But the fertilizers clearly put tight stop losses below the low of the entry candle, alert candle, but it is broken out to a major resistance, and then everything seen bullish as of now. The fertilizers. This is a weekly chart, but entry estimate on a slight pullback on a daily chart. NTPC power sector as such is doing good, and this is a rounding pattern plus a channel up move. That's what you see. Momentum breaking out on the medium term trend is up. Volumes are good, right? And it's clearly breaking out a major resistance zone, and this could give a long way up towards the channel top at least, right? So that TPC and Deepak Fertilizers, two stock picks for the next week. This is a Nifty strategy options, which is fully hedged. Means you know what exactly is risk defined. You know what we're going to lose, right? It's having a very good range, and basically it's a bear call calendar spread, you can say, right? It's max profit is also, the RiskReward is okay, probability is good, and range is also good. The assumption is that Nifty is not going to break the 7950 or 18,000 that level. It's not going to happen. Basically, we have sold current month's 17,850 call option at 29 rupees, and then we also bought it next weekly expiry, 28th April, not next month. 18,250 call, we have bought it, right, for 21. So in effect, RiskReward seems okay if you're exiting, as and when the price moves somewhere closer to the 17,500, 600, 700 levels. You can book the 1 to 2% of target profit booking can be done, right? That way RiskReward may work out. Very good range, with the selling pressure that is there on the top, it's unlikely that 17,950 is breached, and probability also is reflecting that POP. That's a wrap up out here. So we have seen a great recovery of 15-20% on the indices. Right? Major resistance are all taken out and very good supports at the downside. But the thing is, we probably is making a lower swing high. Once again we could not sustain the continuous up move and we have fallen back. So now this swing high, will it fall down below the moving averages supports and then reach the gap support and then fall back and make another new lower low is what the question is now. That is what we have to question. So most likely that may not be happening. It may be sideways or neutral, with mild bearishness one day and bullishness another day. So that would be the kind of move that may be happening for the next weeks, not just next week, for the next several weeks or next week. Because good supports are seen, CIP changes, priority bounds can be seen, big scale up has happened, right? Bollinger Bands are showing consolidation and bullishness there in the Banknifty. So overall it's good, but the US market bearishness, the Fyers selling continuation, all this, and the Ukraine war cases is all concern. And the crude oil rising up, gold shooting up, and rupee weakening. These are all concerned, right? Positive factors, we are, even when the war is happening, we have done a remarkable recovery and then resist. It's not ready to fall down, right? Every dip gets bought, right? Even if it corrects in the range and then bounce back equally in few weeks. So that's a strength that is in the market. So it may be consolidation that may be having, that's a view. Neutral sideways consolidation with a mild bearish bias because of the price action is what my view for the next week is. So you have to be cautious as to the weeks, as to watch the weeks not to move above the 20 levels. If it is moving out above 20 once again and then spiking up, then that means you have to stay out of it once again. So 18.3, it's not 305, it's 350. 18.350 and 39.500 is what you have to watch. The moment it reaches and breaches that levels and closes above that with bullishness, that is when you see that you are back into continuation price. And then you would have this few days of up move and few days of down move. That's basically nothing but sideways in a both side view, right? So you have to be cautious, right? Reverses can happen in the positional swing trades as well as in the intraday trades, because volatility is still very high as per what the Bollinger Bands are saying, right? So that it will be volatile moves in the Banknifty especially, right? And so you'll have V-shaped moves intraday. So have tight stop loss if you're doing intraday, but intraday is more comfortable since its VIX is below the 20, right? Overnight predictions, overnight positions that you take on the derivatives or options, always have a risk-defined strategy. Right? Always use vertical spreads, current spreads like what we have seen today, or non-directional option strategies, whatever. But the risk has to be defined so that next day morning when you wake up, you have a capital should not be wiped. You should still have some capital left for the continue the train for the upcoming day, right? So that's a whole game, right? So that's a wrap up of the view. And neutral sideways with the mild bearish bias is what my view is. If that's based on all this analysis that we have seen in the previous several slides. So if you it could be possible that you have a different view, based on all the same analysis that we are going through. So, but the thing is, if it helps you to frame your own view and trade plan for the next day, consider hitting the like button and then share it to maximum. We have very few subscriptions. Appreciate the help in this regard. Thanks for watching. Happy trading, happy learning, happy investing. Bye.